Hey, welcome back. It's May 21st and today is a special day. We've actually hit a brand new all-time high of Bitcoin price, hovering just over 109.5k per coin today. So it is a significant milestone in that we've actually reached a brand new all-time record, an all-time high record in its entire history. So I've always had it in the back of my mind that we're going to be seeing brand new all-time high records consistently over time because I'm a long-term investor of the asset class. But it comes to a point where you just can't help it, really, that it just reaffirms your beliefs that it's going to be the long-term best performing asset class of all time, and the hours and study you put onto the asset class to reach that decision why you invest into the asset class in the first place. So I'm going to briefly just give you a couple of explanations why this has happened and where can we expect to go from here. So really, this is all to do with the ongoing debacle of the mounting fears over the global trade war and the US tariffs. This has been one of the major instigators for this all-time high record of Bitcoin. And also there's increasing concern from investors to start moving some of their capital from the TradeFi analog world into the Bitcoin. And as a result, we have seen almost $3.5 billion worth of net new inflows in the course of May into the Bitcoin spot ETF products. And that has actually reignited brand new investor interest in the asset class. And also we are starting to see a newly formed Bitcoin Treasury company or Bitcoin development company called 21 Capital. You might have heard this from the news release. This is actually headed by Jack Mallers, who is the CEO of Strike, and the 21 Capital firm is comprised of three major partners. Tether, as we all know, Tether is the leader private issuer of US-backed stablecoins. We got SoftBank and Cantor Fitzgerald. This last one is quite interesting because Lutnick, he's the Treasury of Commerce in the United States. He's the founding partner of Cantor Fitzgerald, and he's actually formed part of this 21 Capital firm founding with Jack Mallers, which is quite important because him being part of the US administration is really going to have a huge influence of the course of what goes and what not goes in terms of commerce and investments from a US national perspective. So the purpose of 21 Capital is to act like a rival company to MicroStrategy, now called Strategy, trying to replicate what Michael Saylor and his team have done ever since the beginning of its journey, particularly in the last 3-4 years, where they've actually created and established this famous Bitcoin standard playbook, encouraging companies, publicly registered companies, private companies, to part some of its fiat cash held in its reserves, corporate treasury reserves, into Bitcoin. And the wonderful ingenuity that Michael has brought as a result of this playbook is he's creating a whole heap of financial products to enable him to issue debt to buy more Bitcoin into its corporate stash. And this is exactly what 21 Capital is aimed to achieve, is to replicate that model and as a result become a rival to Strategy. So this is no at all surprise that this is bound to happen, right? It's just a moment in time where Michael Saylor is acting as a monopoly, and I still see them acting as a monopoly mainly to do with the amount of stash of Bitcoins that they've accumulated so far. Bear in mind they actually got over 560,000 Bitcoins, and I think at the start of 21 Capital they're only going to bring in, as part of the initial seed money, over 40,000 Bitcoins, which is nowhere near the 570,000 that Michael, through his strategy company, already has. So there's going to be an awful lot of catch-up as a Bitcoin treasury company. I think what's going to be different is that 21 Capital, as part of this USP, is to not only replicate what Michael is doing, but to create more apps, more investment lending products on Bitcoin as collateral. Now, I've made heaps of videos, a few videos, which is all the more reason why you ought to subscribe to my channel to learn a little bit more about the notion of Bitcoin lending products. I think 21 Capital is going to provide that USP, i.e. creating Bitcoin lending products. And in fact, I made a video on Strike, which is again headed by Jack Mallers, they've actually issued the first Bitcoin lending product out in the market, where they're encouraging its customers to use their Bitcoin collateral in order to take out fiat loans without having to actually part their Bitcoins, which is quite interesting in that they will not have to worry about the taxable events that they'll have to accrue to their IRS or to any taxable authorities, depending on the jurisdictions that you live. So I think this is going to be a USP over the Saylor strategy company. But like I said, nevertheless, I still expect the strategy company to become the market leader in holding the most amount of Bitcoins in the Treasury, purely because Michael has already made consistent declarations that he's still focused on issuing more debt to buy more Bitcoin. Now, what can we expect moving forward from here? We're clearly eyeing on the 110k mark as market dynamics are amplifying or could amplify further price movements in the asset class. There's going to be more investors pouring money into the spot exchange traded funds, the ETFs, amid chaotic price action in the bond market, suggesting heightened concerns about the actual health of the major economies. Now, we've just recently heard news over the past few days that Moody's, which is one of the credit rating agencies, have recently downgraded the US rating from AAA to AA1, which is just a one-notch downgrade. Now, what is the repercussion of that for US consumers? Well, this would mean the rising up of consumer prices, whether it's mortgages, credit card loans, or any type of loans. That's going to push up the prices, which would mean that it has to come to a point where there's going to be pressure on the Fed to start lowering the fund rates, perhaps a little bit more sooner than expected. Which, as we all know, when that happens, because we're still on this train journey of cheap money era from the central banks, whenever they start lowering their fund rates, which would mean driving more capital inflows into the high-graded stocks and, importantly, into Bitcoin and crypto assets. So I see this as the next imminent set of dynamics. We're going to be eyeing this $110,000 per coin. Perhaps later this evening and tomorrow we're going to see that happen, in which case it's going to be 120 and then 130, perhaps 150, and eventually 200,000 perhaps by the end of this year. So really, no matter the predictions you might hear, we must celebrate these intermediary new all-time high milestones that we get as today, and don't get distracted by the noise and just stick with convictions and celebrate every now and again. And if there is a correction, which there will be, because there'll be short-term traders who are going to be using this to sell off in order to profit take some of their gains, as well as many other people out there, which is all the more reason why we ought to stick to our own convictions, hold on to the asset class into the long term, and celebrate every now and then whenever we have these brand new all-time high records happening. So that's all I would like to share with you today. If you enjoyed today's episode, please don't forget the like button, to share the video to friends and colleagues at work, and if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.